Apple specifically with Ray J's Chris Caso, who's got a buy rating on the name, target of 190. Chris, good to see you. Happy Friday.
Happy Friday. Thanks for having me.
We mentioned earlier 10% off the May lows on Apple, and I wonder, is the market accurately processing the dangers of China execution, reports of flat phone production, worries about consumer wallet and all of that?
Well, our view is for the June quarter, it's mostly noise, what happened in China. It's the kind of in-between quarter ahead of the new iPhone launch. So if you're going to have a problem in China, the June quarter is the best time to have it. I do think it's certainly valid to have consumer fears about the second half of the year. Apple's essentially a consumer company. If you have fears about the consumer, that has to mean something. In addition, because of exchange rates, if exchange rates stay where they are, in a lot of geographies, Apple's going to need to raise prices in the fall because they like to keep the iPhone price consistent in dollar terms across the globe. So those are some of the concerns. On the positive side, the last 2 years, Apple has been kind of constrained with iPhone sales. In 2020, it was because, some of the phones launched late. Last year, there were supply constraints. So there's also some pent-up demand for iPhone in the fall as well, where we didn't convert as many people to 5G as last 2 years because of those reasons. And then finally, in terms of consumer exposure, iPhones are generally priced in monthly terms on installment plans. So, in terms, it's a fairly big ticket item. It's a big ticket item that's priced over time. So it's going to be a little less volatile to consumer spending because if it's time for your iPhone upgrade, you're probably going to be able to afford it.
Right. I think, in prior eras, we thought a lot about phone production, still do, but it was more about ASPs and what that would mean to overall earnings. Has the migration over time to services and even, I guess, some ancillary product silos made that less of a crucible for the company?
Yeah, the short answer is yes, but our view has always been that the iPhone, just because of its size, iPhone has to work and has to be moving in a positive direction in order for Apple's stock to work. And you remember a number of years ago, before the 5G cycle started, this thesis that Apple had become purely a services company. You could buy the stock on services, and the stock didn't start to work until we were on the cusp of 5G iPhones and iPhone started to work again. So the way we look at it is, services is sort of icing on the cake. If iPhone is working right, then the stock will work better with services. But if iPhone goes in the wrong direction, then services won't bail them out.
Chris, we've heard from a lot of tech companies this week that they're either slowing hiring or they're laying off workers. Apple said that it was increasing its starting hourly wage from $20 to $22 an hour. That's for their retail workers, which is a little bit different than the makeup of a lot of other tech companies. But I'm curious if you see this as a bullish signal that they do have the cash that people are concerned about with other tech companies. Obviously, Apple has a massive cash load, but in terms of being able to deploy it toward its workers and not be in that same position of kind of slowing hiring or laying people off that you're seeing elsewhere in Silicon Valley.
Yeah, no, I do agree. And not just the cash they have, the cash that they generate. And, there's no question, my conversations with the company that there's any anticipating, slowing down spending, their foot is still on the accelerator pedal. And, listen, this is how, good companies gain market share and gain traction, through market cycles. If you can continue to spend through the cycle, you're going to do better than others. And certainly that's a benefit for them.
Hey, Chris, looking at your other coverage, Broadcom, big week for that company. Just curious to get your take on the deal.
Yeah, so I think Broadcom has struggled a bit to get investors to really pay attention to the services business, frankly, because semiconductors have been 75% of the business, and software has been kind of out there, and most of us like myself that cover Broadcom, it's covering it from a hardware and a semiconductor side. The good news in this acquisition is by the time VMware is done, is that Broadcom's going to be half semiconductor, half software, so it's going to be impossible to ignore. The question is, are they going to get the multiple for that? And I think investors still kind of struggle with how to value Broadcom because, essentially it's a bit of a roll-up now. It's a lot of different acquisitions, which most of them have been pretty successful. But it's hard to figure out how to value a company like that. And I think that's kind of where it still struggles on the multiple.
Chris, that's helpful stuff. Good to see you again. We'll see you next time. Chris Caso joining us from Ray J.